Hello, I'm Rachel Jones with the Finance News Network. Joining me today from Brickworks is Managing Director Lindsay Partridge. Lindsay, welcome back to FNN.
Good morning, Rachel.
Thanks, Lindsay. Now, first up, can you remind our audience about the history and spread of operations that comprise Brickworks today?
And in 1934, a bunch of the Australian brickmakers or Sydney brickmakers got together and formed Brickworks Limited. There was 26 of them. In 2000, we were just 5 brickworks in 2 states, and we realised we had to grow or become irrelevant. And we did a series of acquisitions, which made us both national. It made us the largest brick company in Australia, the second largest masonry producer, the second largest rooftop producer. But then in the noughties, in the early 2000s, we realised, well, we had a lot of surplus land we didn't need for brick making, and what could we do with it? And if we sold it, that would just be a sugar hit for our shareholders. But there had to be a long-term position. So we formed a joint venture with Goodman, which is one of the largest industrial property trusts in the world. And that's another deal made in heaven, if you like. And we've basically put in our land, they serviced it. They went and found the customers, they did pre-leases, we built sheds. Well, that joint venture trust is now worth $2 billion. And our share of that's worth over 700 million. So we progressed a bit more, and then we realised that we really liked building products and we were very good at it, but we couldn't grow in Australia. That we were up, we had half the market and a lot of businesses, we just couldn't grow. And so the strategic decision was made to go to the United States. And we set ourselves up buying Glengarry in the northeast of the US, and now we've backed it up with 2 more acquisitions. So today, after a bit of rationalisation, we've got 10 operating brickworks in the northeast, 1 manufactured stone plant. We've got 770 employees. We make about 400 million bricks, so it's not bad for 18 months. A bit of trouble at the moment, but great progress there, and that's going to be a great business going forward.
Thanks, Lindsay. That's a fantastic history that you have there. Now, moving to today, and a question many investors are asking companies at the moment: what impact is COVID-19 having?
Yes, well, look, like most companies, we took steps very quickly to protect our staff and our customers. A lot of our employees, about 400 in Australia, have been working from home. We've kept all of our factories running, although we did right from the beginning. We had biomedical kits available at every site, so we tested their temperature and did all those sorts of things. And basically, the business in Australia has really just continued on. We've actually met our budgets. We're very happy how the way it's gone, because there's a lot of pipeline in housing. There's 6 or 9 months before you start to feel the effect of no sales being made at the moment. Unfortunately, in the US, the governor in Pennsylvania put an order out and just basically closed down 5 operations, or closed down a whole Pennsylvania operation. So that put us out of action. So we decided that we'd take advantage of that. We were going to do some rationalisation, so we accelerated it, and we dropped out 2 plants and consolidated those into others. And when we were allowed to recommence, we've now recommenced. So today we've got all our plants back up online, but it did have about a 30% hit to our sales during that period. And we're starting to recover now, and we're hoping next week construction in New York will open, which is a major market for us. And we'll hopefully get back up on our feet.
Now let's take a closer look at your divisions. Can you give us an update on your building products?
Yeah, well, in Australia, as I said, our sales have remained fairly strong. But we were concerned about how much things would drop off in the second half. So particularly in April, we have like Easter and Anzac Day and these sorts of events. It can be very soft. So we took the steps of taking quite a few plants offline to control our stock. Well, it's been great for cash, but it's obviously knocked the earnings around. But we're hopefully now we'll have a bit of a better run going forward. In the US, as I said, actually our sales year to date are up 26% because of the acquisitions, and we hadn't seen a full year, but we've had a couple of months where we've been down on a like-for-like basis by 30%. So a few too many moving parts there to sort of see how it's going to end at the end of the year, but we're hoping we're going to be, EBIT positive in both countries. So we'll just have to see how it goes.
And can you give us an update on your property?
Yes, well, look, it is really exciting. We're currently putting in all the services on Oakdale West. That's over 100 hectares in size. It's cost us, close to $100 million in services going in there. It really hasn't missed a beat. We've got a pre-lease there with Coles, and that's a massive building. It's about 10 football fields and 10 stories high. And we're sort of following a few more we're trying to bring into there. and we're building a new masonry plant, which is on the other side of the property. We call it Oakdale East, and that's just about ready to get going as well. So it's really quite exciting times in the property. It's actually going to grow more in the next 2 to 3 years than it has in the last 5 or 7.
And how about your investments?
Well, look, Washington H. Patterson has an incredible record. I think it's 13% compound growth for the last 20 years. Increased its dividend every year for 20 years. I mean, it's only one of 2 companies that have done that. I'm sure they'll come in with a strong result as they usually do, and they've been a great investment, a great partner for us.
And now to your finances. Can you give us an update, including a comment on the dividend and share price?
Yeah, look, our finance, we're pretty conservatively geared, sort of under 20%. And, at the moment, it was a bit unfortunate. We did a lot of acquisitions, a lot of growth, just as the virus hit. And, we don't normally would like to have been a bit lower than where we are, but anyhow, we are where we are. But we've got plenty of headroom, and we think we can run through okay. Now, the thing that's really interesting about our dividend compared to everybody else, and the reason why there was only 1 year since we listed in 1962 that a dividend ever went down, that was 1975. So we've had 44 years of steady or increased dividends, is because of our investments. And if you add up the income that we receive in dividend from Washington H. Patterson, plus now the income stream we get from our property trust, that totals about 80 million a year, which is the dividend. So, we would be pretty confident that we'll continue to pay our dividends, and with any luck, we might be able to increase them a bit more. We just paid the interim, and that was up 1 cent, so 20 cents. So, I think that's one of the great things about a company is that security of dividend.
Lindsay Partridge, it's been great to chat to you today. Thanks so much for the update.
My pleasure.